Alrighty, greetings once again, fellow traders. This is Robin Hood, and today we're going to talk about damage control, hedging and washing, and all things that pertain to that, how to get out of trouble when you need it. This is a very important subject, probably one of the most important subjects that we've ever done. Now, I've taught about this in the past 4 years, I would say at least 7 times, okay? And each one of these times that I taught about this, it was like an hour long, all right? It's not that easy to teach. You might have to go through this a couple times, but you really want to get this because we know that not all of our trades are going to be winners, okay? Some of our trades are going to be losers, 10%, 20%, who knows? Bad week, maybe even 30%. How do you get rid of those, okay? So, damage control and getting out of trouble. Now, I know this subject, it doesn't sound like fun. It's not fun, okay? It's not. But do you skip the grappling and ground control classes in your Kung Fu class just because you don't think someone is ever going to take you down to the ground? Do you know how many fights end very quickly once you're on the ground? I mean, people don't know what to do. They have no idea of anything to do with Brazilian Jiu-Jitsu, okay? Grappling, ground control. Nothing, all right? If we have placed a bad trade, and in time we recognize that it is a bad trade and that we're losing money, it's not going our way, how do we handle it? Now, there is more than one way. The first way is to just stop out. You know, you have your protective stop in place and you kill it and you're done. It's easy, and believe me, a lot of traders choose that. And I'm not against it, okay? I don't want you to think I am against it. I am not against it. Not every trade is a winner. We have to be able to admit that we are human and that we can be wrong 10%, 20%, 30% of the time. There's nothing unmanly about this, folks. There is no reason to be upset about it. Just kill the trade. Go on. It's not a bad idea. But what if you are a fighter spirit type of a person? What if you just want to duke it out and force it to pay you anyway against its will? Now, I'm not opposed to this, and I'm not afraid to this either. Okay, I see 2 different ways, and they are both acceptable to me. I do stop out, folks. 10% of the time, maybe even 20% of the time, once in a while, I will stop out. But there's a lot of times I don't want to stop out, and I want to force a losing trade to pay me. And it's not about pride, and it's not about, you know, I can't admit that I'm human or I can't admit I'm wrong. I absolutely can. All right? Oh, look at that wonderful typo. That's nice. Let me see if I can correct that right now. There we go. Put an E in there. All righty. So we'll go back and start over. So let's say that you're anticipating a certain move, right? And you have guessed it wrong. And you have a bad entry. The currency pair is moving against you a little bit or maybe a lot. Now, we've got a few ways to handle this, and it involves increasing risk. But if you have been a good trader, and you only entered your trade in 1/10 sized bullets anyway, okay, then adding to a position should not be such a horrible thing. Many traders like to preach, never add to a losing position. Oh, don't add to a losing position. You know, but the market makers, they don't think this way at all. They add in all the time to get a net average price that's better and better. And I would rather trade like a market maker than a scared little retail trader that can't, you know, figure out what to do. But that's just me. So you can choose for yourself what works best for you. But I'm just telling you that I have absolutely perfected this over the course of, you know, the last 5 or 6 years. Perfection. I'm not afraid one little bit. So if you're about to short into a Forex move and you see a 5 or maybe a 15-minute sell and you place your order and it goes against you, you've got 2 options. Close it down for a loss or add to the trade at the next decent sell signal. In essence, this is dollar cost averaging yourself in at a price that is improved, but you double your risk. It shouldn't be a problem. I want to repeat this. It shouldn't be a problem if you are firing bullets. If you have made a trade plan that says I can trade all the way up to 10 of my bullets, I can take 1 or 2 or 3 or 4 or 5 And then I start to get a little bit nervous, right? A little bit nervous if you've had to take 5 or 6 of them, but you're still not at your maximum level, so what's the problem, okay? So let's say that you place this trade on a 5 or 15 minute sell. It goes against you, and it goes up 30 more pips, okay? And you see another decent 5-minute sell, and you dollar cost average yourself in at that price. It's an improved price. If you've done the right thing to begin with, and you only took a small position anyway, thinking like a market maker, and they do not take full positions in one slice, then this is our chance, your chance, my chance, to get another position, still leaving us more room to add if we are still wrong. Now, here comes the disclaimer, okay? There has to be a disclaimer on this. Only do this if you are comfortable with the idea. If you're not, stop out. Don't do this if your account can't handle it. If your account is in any kind of margin trouble, or you have too much lots out there, kill it. Kill the position. Okay. Only do this if the position is small, and if you simply do not mind adding to it. Only do this if you are very confident in your second entry, and don't do this if you're brand spanking new to trading, or you do not know what you're doing, and you have no confidence in this. If you don't have confidence, then don't do it. You're just going to make things worse. Count your risk. So make sure you think about all that I just said, please. I would like you to just go watch it again. Rewind, watch it again. The thing is that this works many times, but sometimes you only have to do a few washes, maybe 1 or 2 washes, and that's it. I mean, the thing tanks or rises in your direction, and you're out too soon, your washes are over, it's all done. Okay, that's the way it goes very often. And sometimes you have to work one currency pair for a day or 2, maybe even 2 days on end, washing, right, multiple times. But if you're in some kind of a power run and things just keep going against you, then you need to stop out or hedge pullbacks until you can figure out what is the best course of action. And sometimes hedging up and just completely capping your loss, giving you time to sit back and think about it, is not a bad idea. I've done that before myself. I've done that many times, especially on Fridays. If I see a decent move and I realize I can cap myself, I will often cap it and carry it through the weekend that way. Now, I'm going to go over all of this, okay, washing and hedging on the charts in just a few minutes so we can see what it's like. And if you sense that you're going into some kind of catastrophic or vicious cycle, I would rather you just kill the trade and be free, all right? I'm trying to give you good warning and good counsel here. If it's going to cause you any fear, anxiety, or consternation, it's probably better for you to just go ahead and take your loss and remember the wise words that were once spoken that said, if we don't learn how to take a loss, one day we are forced to take the mother of all losses. Believe me, you don't want the mother of all losses, okay? All right. So we're almost ready. We're going to go live here in a minute on the charts. Just talk about a few more things. If we are in a losing trade, we do not need to panic. We simply need to think it out objectively and decide what to do. Many great traders like Bill Lipschitz in the Market Wizards book, you can read all about him. He will tell you of his loss and how he turned a $50 million loss on the pound into just $5 million in one day. All right, that's a huge win. The question then becomes, how much are we going to lose? Panic will make you kill the trade at the absolute worst time and do the most damage to you. When I am wrong, I think things over for a little while, and I analyze where I can get out for an escape that's not so bad, often taking a 30 pip loss or more and turning it into just a few pips of loss, or maybe even a small win, okay? And that's the better way, in my opinion. So let's go and see some live examples of this. I'm going to pause the video for a second, resize my screen, and we're going to go right to the live Forex charts right now. All right, well, I just got my charts up, but it didn't actually let me resize, unfortunately. So we've got a little bit mini charts right now. Okay, Nothing I can do about that. I'm sorry. They are tad miniaturized. Not as big as I would normally like, but that's okay. So I'm just going to start with like really any pair right now. I just want to give you so many examples that I really don't feel that it matters all that much what currency pair that we start with. And I'm just going to go through a list, and I'm going to pick some hypothetical situations. Now, some of you might be upset to hear that and say, oh, he's going to pick hypothetical situations and not live results. Well, listen, this is the best way I can explain the concept to you, is by picking it out this way and trying to show you what we probably actually would have done, okay? So, looking right now at the euro dollar, all right, I've got a euro dollar chart up. You can see here that this is a Sunday, right? This is a Sunday, and we wouldn't be, really doing much with that. But let's say that you shorted somewhere up here, okay? You saw this 15-minute pin, for instance. See that bar right there? Let me try and blow it up a little bit bigger. There's the 15-minute pin bar. Let's say that you shorted that, and when you pulled back into the river, for some reason, you just failed to get out. Okay, I know, I have to pick weird instances because you probably would not have done that. You most likely would have gotten out at a profit when you saw it pull back into the river. But let's say that, it was only a few pips. You shorted at 112.60, and the price hit 112.50, and you just weren't looking for a lousy 10 pips. You wanted more than that, and so let's say that you did not get out, okay? Fair enough. Now, prices bounce here, time goes by, and you see another 15-minute sell. Perhaps even on that bar, right there, that red one. Maybe you could have doubled your trade and taken it to 2 bullets fired. But then it went against you, and you saw another one, maybe somewhere up here. You found a 5-minute sell. Remember, I'm on a 15-minute chart, guys, okay? This is 15-minute. So we're talking about 5-minute sells that take place inside of this area. I mean, you are watching your 1 and 5 and 15-minute all at once, right? Yes, you are, because if you're not, you're making a major mistake. So here you got 3 bullets out, right? Something goes down nicely, but you see that it hits that very same price as it did before, right there. Oh well, I mean, you're just not getting more than 10 pips. But now you're a little bit happy, you have one that goes out for 10, you got one that goes out for maybe 12, and maybe you've got another one that goes out for 15. Altogether, these would add up fairly well, and your wash is complete, and you didn't have to panic. It's over. It's done. Nothing else even happened. Now let's pick something that's a little bit more scary, okay? We'll come over here on the 15-minute chart, and it's like this. What if you saw this big drop, and you saw that piercing bar right there? That's a buy signal, a piercing bar, and you purchased it. And you didn't get out when it popped that far, okay? You simply wait for the next buy signal. You just wait. Now, I know I'm picking an example right now that's pretty easy. Don't worry, we'll move to some harder ones. It's gone against you, but you see another 15-minute, hammer bar, okay? Take 2 of them, right? Now you're in for 2 bullets. Time goes by, and it comes up, and it makes, a 15-minute piercing kind of a sell bar. Red, scary. You didn't see that, okay? You didn't see that. You didn't see that. Forget about that. You didn't see those. You just saw, the 786 fib retracement, right? Okay, here it is. See the 786 fib right there, and you saw that bar? Okay, you kill the whole trade. You're done. You're out. You washed, and there was no problem. It really isn't even actually a wash right here. This is just nothing but gain, okay? So let's go on to something a little bit more troublesome, for instance. Here is a really good example. All right, these are great examples. I'm going to shift over into the 5-minute time frame. We will crank backwards through time. Try and get it blown up properly. Okay, so we can see it. This is a very good example right here. Love it. Okay. Now, let's say that you're trading. And let's say that you're trading at 0.1. This is the best way I can explain it to you. All right. So things are moving along, and you're trading at a 0.1. And let's say that you shorted, well, let's say you shorted early, right there, okay? You have 0.10 short, and it goes against you. And it goes through time, and you're watching it for almost an hour, right? It's now 9 o'clock, and you see that you really couldn't get out, and it just kept going against you. Well, if you can short another 0.1 there, now you've got 0.2. Right? It falls. When this 0.1 that was shorted over here falls down to here, you're almost at break even. This one's a little bit out of the money. You know, the first trade you put on is maybe 5 to 10 pips out of the money. But over here, you can basically take the gain on your 0.1. Okay, it might be small. I can see here that this is only about 30 pips, so that would be about $30, and you can reach into the losing position over here, right? Let's say that you didn't short it until I don't know, 147.20, right? So that you're deeply out of the money. I just have to pick examples that can get us to understand, all right? If you shorted here and you took 20 pips of this 30 pip move, then you have $20. You can reach into that losing trade right there and type in 0.02 and wipe it out. All right? Now that might go out for a 10 pip loss. So if you make 20 bucks on this second trade, okay, and you have a 0.02 that goes out for 10 pips, how much did you lose? Well, at a 0.01 at a 10 pip loss, it's like $1, right? And at a 0.02, you might have lost $2. So what's so wrong with making 20 and then losing 2? You put net 18 into your account, and now you're only left with 0.08 to contend with. Okay? 0.8 is left. Now, let's say that you kept your 0.8, all right? And all of a sudden, things went crazy. Up they go, and your 0.8 is really in losses now. But you saw that, and so you shorted again at 0.10. I have to pick these random ways just to show you the math and how it works. This is exactly how I think. Exactly. It's not, I'm not lying to you. This is exactly it. Now you have 18 micros out. Time passes by. It slides sideways through time, but it doesn't fall to support like you wanted. Uh-oh. Now we're in loss. Now we're really cooking with Crisco. Okay, so the losses are growing, right? They're not that horrible in reality. You're doing this in bullets. You see this, you take another 0.1. Let's just pick a random area, okay? Maybe right there you picked a 0.1. I'll even use that. Just make it really hard for us, okay? Now you are in for almost 3 bullets, almost 3. And let's say right over here, you even went ahead and took another, okay? Let's just really pile it on, all right? So now you're seriously into it, and you're upset because you've got 4 of your bullets out, you only have 6 left. So if you see, believe me, whenever I have 4 bullets out, I am looking to take them off as fast as possible. So if I had a 4th bullet that was shorted at 148, and I see a drop down here, okay, to 147, give me 1 minute, please. Oh, what is that? 147.80 something? Let's call it 147.88. All right, that is a 12 pip gain. All right, 12 pips is worth $12. Now this one here might have only gone out for about a 2 pip gain. making us a total of about 14 bucks, okay? So let's get rid of those, all right? I'm just going to erase them. Gone, right? Gone, okay? So now we have $14 in our account on this fall. But look, we still have, 18 micros to contend with, all right? So maybe at that point, if $14, maybe you realize you can only wash off like a 0.01, okay? So you go ahead and do that, and you're taking a small loss on a 0.01, and it brings you down to 0.07 to contend with. So now you have a 7, and now you have a 10. And you have maybe, I don't know, 20-something dollars worth of gains in your account because you're making money and washing away what's going on here. We'll move forward through time, and we'll remember our price points. I'm going to go ahead and mark them. Here's where you sold one. Here's where you sold another. So we move through time. Blow it up nice and big. Remember, you got out here. You didn't get out there. You did not get out there. Remember that? You just saw this quick move, grabbed it. All right? Now, you see this move happening. Look where you are. If I had a 0.1 and I still had a 0.8 from before and this much time passed me by, I'm telling you I take that 0.10 off. I don't care if that thing even loses 1 pip or makes 1 pip. It's over. All right? So let's just say that when it fell here, you washed out. Now we're going to remove that. And you still have 7 micro lots that you need to contend with. Time is going by. Time is moving. You see this is acting as support. It rocks up, comes back, acts as support again. You're not feeling too comfortable with it. Perhaps maybe you shorted a 0.1 somewhere in that bar. Like when it broke the candle body low, right there. Okay? If you did that, if you did it, then you probably would have sold somewhere around here, 147.94, let's call it. As it rocked quickly to 147.85, you realize you got about 9 pips, and that 9 pips all happened in 1 minute of time. Tell me what's wrong with taking that $9, right? Just take the $9 gain. ASAP. Take it. All right? And then you reach in over here and wipe away 1 micro lot of loss and pull this thing down to 6. Now you've only got 6. Time is going by. You're still trading. You're still trading. Over here, you see another nice looking 5-minute red bar. Perhaps right when it breaks that low, you short it. But it goes against you. Let's forget about adding. Let's not even say that you added over here, okay? Let's say that you were like, well, I'll add, but I won't add unless it goes much higher because I'm not going to get trapped with 2 of them right on top of each other, right at the same price. Okay, so you added one here, a 0.10. Refused to add another one there. Okay, watched it go out of the money, watched it go against you. And then rapidly, zoom, down it goes. And you watch the clock, and you see how it closed, you saw how it closed, you saw how it closed. And then on the 3rd candle, you decided, well, that's it. I think I better leave. And you stop it right there at 147.90. Okay, so where did you short? You shorted maybe here at 97 or 96. I mean, let's call it 96. Let's do that. And here's another 6 pips, right? Maybe you caught it even better. Maybe you caught 7 or 8 pips. I don't know. It's up to you. You have to watch. You have to focus. But let's just say it was like $7 that you pulled on a 0.1. You pulled $7. Okay, well, that's how it works. You just keep working. Now you go over here and you wipe out another 0.01, okay? And now you only have 5 lousy micros left. Now, if you notice through this example, you've been washing, all right? You've committed many trades. I've lost track. I'm sorry. I've lost track of how many trades. I don't know. But you put a whole bunch of them on. And as you are making money on these trades, okay, you're getting rid of stuff that is, you know, against you. I do see a couple of small sell bars in here, but please notice that the price is not far from the MAs, and they're not, you know, the way this is trading, I don't think I would have gotten in any of this, okay? It's very possible I would have gotten in right over here, so let's go ahead and call that one. See that big candle? Boom, you just shorted, I'm sorry, the big red one, right there. So let's say you shorted another one, right? Another 0.10. Oops. And time is moving along. You see it come down, but it goes against you. Pulls back into the river, goes against you again. And you have not added. Time is going by. It's been 2 hours now. You're busy trading other things. You're not just solely working on Euro Canada. I mean, you're trading other things. You've got things to do. You've got multiple monitors running. You've got all kinds of trades going. Everything's beautiful. So you're just spacing out, whatever, and then bam, you see another one. Or maybe on this bar. I don't care. You pick. It doesn't have to be me. One of these things you sold. As a 0.10. Now, as time moves along, you notice that it takes time to sell off, right? It's not working very well. But over here, where you start to get this nice sharp down move, perhaps you would exit there. Let's take a look at the prices. 148.30s versus 148.20s. I can see about 10 or 12 pips right here. I really can. Between here and here, that's a good 12 pip move. All right? This one that you shorted, remember, there's no real money on this thing. When it comes down into these lows over here, I mean, you know, it might have 1 pip. It might have 2 pips. And that's about it. There won't be any real profit on this one. The profit comes from the second one. So let's say it shoots down and you grab your 10 pips, or maybe you got 12. And this one over here, maybe you got 1. 1 earth-shattering pip. Hey, at least you're gone. Okay, you just pulled off another 0.2, and maybe you made like $13. So once again, you reach into your losing trade that's way, way back, and you literally click in your order box, right? You pull this order up rapidly. I mean, the second you click out for 12 and 1, and you take the money, you click this order box open, okay, and type in 0.01 and hit the close button as fast as you can. And there goes another micro. Well, now you're down to 4. All right? So, I mean, that's basically the gist of how it works. When you're shorting, okay, that is how it works. So, perhaps, time moves on. I seem to remember this the other day, and I think we took this too. Somewhere around here. Maybe you shorted there. Or maybe not. Maybe you shorted that bar. See that beautiful sell bar? All right, why am I pointing these bars out? Because they're sell bars. Right? This big wick and a break below that, that's like a sell. But if you were watching the 1 and the 5 and the 15, you might have been nailing it right there, okay? And getting out right here. That's the astute trader. Takes quick moves like that. But let's say that, you were a little slow and you didn't grab. You waited for it, for the bar to close, and you didn't anticipate, so you didn't grab that. Then that's fine. Look over here. There's a nice sell bar. Right when it breaks that candle body low. What is the price? 148.30. Okay, you shorted another 0.1. You wait through time. See it come down. Maybe you exited here on this piercing bar. Okay, what is that price of the piercing bar high? 148.16. All right, so if you sold at 30 and you closed at 16, well, now you got 14 pips. There's 14 more dollars. So you just simply count your cost. You don't wash for free. This is a big, big point, okay? If you make $14, you cannot afford to take $14 of loss. Oh, no, 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 no. That's not how it works. Not unless you want to be absolutely clean of the trade and you made money on all your other trades. But if you made 14 up over here, when you reach in here, you're still washing a micro lot away. Now, it's okay if that micro lot's going to lose, you know, how much is that thing going to lose? I don't know, $4 or $5 maybe, something like that. So if you book 16 and then you lose $5, at least you made net 11, and now you're down to 0.03. And that is the method. You just keep moving along and focusing very heavily on trying to re-find, okay, amazing looking sell bars. I'm trying to get the 5-minute charts to just go a little wider, okay? There's a couple sells right in there. Maybe you shorted a 0.1 there. Went down. Let's say you didn't even bother to get out, okay? Forget it. You never even booked a gain. There's another sell right there. Big red bar. Let's say you grab that one. So you put a 0.1, goes against you. It's still going against you. You haven't exited any of this. Maybe up here you grabbed another 0.1, okay? Somewhere up here there would be a 0.1 that you could have put on. But now you're getting hot and heavy again. You're in for 3 bullets. 3.4. It slams down. You're going to take one off, right? Take one off. Book a gain. Maybe you're patient. You see this move. Pow, pow. It really goes. Now you've got so much money on these last 3 right here. When it comes down into this area, or, you know, maybe you're lucky enough to capture this area right here. I don't know. One of these areas. You have so much money in this. You can kill the whole 0.03. You're done. Now, I've showed an example right there that would have taken probably a day. Okay? We look at this. This is actually a little bit more than a day. I'm sorry. Day and a half. Didn't even notice I put Sunday in there. Okay. Well, whatever. It's a fine example. It's fine. Let's say you did this on a Friday. You started working it Sunday night, and you kept on working it Monday. And then you worked it right up till the wee hours of Monday. Okay? So it took you a Friday, a Sunday night, and a Monday to get out. And you traded it a whole bunch of times, but you're clean. That's the goal. Does that make sense? Let's go over another example. This time I will try and find one of a long, and we'll work our way on that one. Alright guys, I'm back now with another chart, and I just picked one that I actually haven't even traded, really, this whole week. Oops, got the wrong thing up there now. Hold on one second, I just lost it. There it goes. I clicked my, whatever, the platform has like this little pop-up things, and when I click it, it makes everything else go away. So I'm going to go ahead and just choose this pair, even though I know that, you know, I've not traded it. It doesn't matter. We need to take, you know, a little bit of the gift of hindsight here and try and use it as a good example. Yeah, this is not bad. I guess this will do fine for our illustrative purposes. It's the concept that I want you to get. And it's really not that complicated, guys. It's just not. It literally involves a little bit of patience, a little bit of thinking, and a lot of calmness, just remaining calm, and, you know, not freaking out, okay? So, let's go to the Euro odd, and I'm going to pick, well, I don't like that one because we know not to do the first thing that falls through the 200, okay? Why don't we say right here? See that big green bar? Let's say that you bought that, all right? I'm going to go ahead and put a line right on it so that I can help find it. And let's say that through time, you noticed it wasn't working out. You didn't get any money. I mean, you can see how long that took. It was about an hour and a half. You got no money. And I'm going to say that you doubled it right there. And let's even go further with that and say that you tripled the trade, just for the point of illustration. But whether you doubled it only or whether you tripled it, it's not that important. Okay, it's just the concept of how the washes are done. So let's move over to the 5 minute. We'll go find those places, and here it is. Running back through time now. Okay. Alright, so let's say that you were watching this on the 1 and the 5 and the 15, and that you saw that this was turning into a 15-minute buy. So let's call it right about there that you purchased it, and your price is 146.80. Okay, so you just bought the top right there, 146.80. So you have a 0.10 at 1.4680. Pretty simple. Now, a good amount of time went through. Multiple hours. You never got into profit. It just didn't work. Okay? And let's say that you bought again right over here. You noticed that this was also turning into a 15-minute buy. And so let's say that maybe you bought that 5-minute buy right there. Okay, I'm going to put this right here. I just have to pick a place. I mean, I have to, without trying to get the charts perfect to to really see exactly where the 15-minute buy was. I just have to pick something. So please be understanding about that. All right. So you buy another 0.1 at how about 146.55? All right, we'll just say that 1.4655. Try and keep things easy. All right. So now you're into it for a 0.2, and you've used up 2 of your 10 bullets. And a little bit more time goes by, and you see things are not working out at all. I mean, not a bit. You've got 2 losers. You're not very happy, so now you're starting to get cautious. Right? And over here, somewhere, this turned into a 15-minute buy. My best guess is if you were watching this, you probably would have purchased on a break above there on this 5-minute bar as it rocked above that high or that one. So I'm going to go with the upper one. Just give the complete benefit of the doubt that you were slow and you didn't really catch a great price. I don't want to make things too easy for us, okay? Where you caught the best price of all, because that's not realistic. We don't always do that. How about 146.33? That's what we'll call that one, okay? 146.33. 0.10, 1.4633. Okay, so now you've got 3 of them on, and it's really not going so well because you're a bag holder. Sorry, but you're a bag holder. You got a couple of losses here, and let's say that you see 146.33 go, right? And it goes up, up, and away, and it pierces into the the 5-minute river, and let's say it starts to come very close to that red one, but you didn't get out on a 1-minute sell there. Maybe you got out about mid-range. Let's just call it that right there. Okay, so you have a 146.33, and let's say you took it off at a 146.46. We'll just make it simple. I'll lower this a little bit more. Let's say you got out there. All right. So if you did, you would have just ended this one. We're going to remove it now, okay? Because you got out right here, 146.33 to 146.46, and that was 13 pips. So let's remove it. Okay, 13 pips on this pair is not, $13. All right, might be about $10 or $11. So why don't we just go ahead and choose 10? We'll choose that one, $10. Great. You reach in here because this one is down, right? This one is down about 20 pips. So you take your $10, but you're negative about, I don't know, 17. And remember, you don't wash for free, so you keep $10, okay? And you're negative about 17, so you can only afford to wash maybe 2 micros. That's all you can afford. It has to be what you can afford to do. So now this turns into 0.08. 2 micros would be maybe about $3, $3.50 of a loss, maybe. I'll just call it 3 to make it simple. All right. So in your account, you have thrown in about, I don't know, what did we say, $11, and then you lost 3. Okay, so that's like $8. You have a positive $8. You see my point? But you only have 0.18 left to work with. So time goes by. Maybe you were able to catch another buy signal. Maybe over here somewhere, right? So if you purchased a 0.1 there, around 42 or something like that, and then you see the thing come up all the way here, like this, 42, 52, 62. I mean, you know, you don't have to get every bit of this run, okay, because you're not going to do that. Let's just be honest. Okay? Even if you caught it here at 42, and you exited over here somewhere around, I don't know, let's call it 72, right? 42, 52, 62, 72. That's like $30. Now, look over here, and you see that this one would be in gain, right? So you could make about $25 on 30 pips. This one here would also be in a gain, but it wouldn't be much. I mean, you know, we're only talking about maybe 10 pips. Okay, so that's about $8, right? So you go ahead and grab 25 plus 8. Now you're at $33. And look here, you still have 0.8, right? Price comes up, it gets really near it. Let's just say you went ahead and grabbed your $33, right? And you're still holding on to this little 0.08. When price comes up right here, nail it. You're gone. That was a simple wash. It was easy. Didn't take that long. It took, you know, what is that? Maybe half a day. Half a day. Just a few washes and it's over. Okay? Now, there's other times that you'll get involved in stuff and it will go dramatically against you. And I think I probably should use the pair that I'm currently in because I got on the pound. All right? And actually, I didn't do a very good job, truthfully, of washing this. I've let a lot of time pass, and I have not washed this well at all. So I'm going to crunch the pound up a good amount, and we'll go ahead and go right on back to Friday and use this as an example, because this is a pretty, you know, this is a big screamer. I mean, I'll tell you what I've done, and I'll tell you what I'm still trying to do. Okay, somewhere over here, now I don't know where, but somewhere over here I bought a 0.1. I bought another 0.1 and another 0.1. And by the time we got down here, I had loaded up so many, guys. I'm just going to draw a bunch of arrows, okay, because I don't even know. All I can tell you is I was into this for 0.10. That was pressing on a $1,000 account. I'm telling you, I was really pressing it. Okay, big example here, big screamer of a scary thing. Now, if you remember, on Friday, I attempted to buy a double-sized bullet. I bought a 0.05, and we took it for a small gain right to there. And I got out, but I don't even think I was able to wash 1 micro. I think I was stuck with all 10 of them. Memory isn't really serving me, okay, all that well right now. I'm sorry about that. It's been a long week, and a lot of time has passed, and all I can tell you is I have been stuck with 0.1 for a long time. Now, I didn't trade good on Sunday night. I did actually have a chance because I saw this on Sunday here and I saw it there. My eyes were on it. And I could have done that .05 bullet and taken a very good move right there. I saw it again. No, I did not see it there. I'm sorry. This would be the midnight candle. That is incorrect. No. But I would have had a lot out. And the problem is that I didn't do it. Okay? So now we have to slide through time again. And we come into Monday morning. Now, I can't remember if I actually took this or not. I think that I did. All right? I think so. Somewhere on Monday morning, I'm pretty sure I bought something. Okay? And when we were way up here, I am pretty sure that I got out and washed out of something. I don't know how much. Like I said, memory is kind of failing me right now, okay, on this pair, like when I did it and all that. All I know that right now is I am currently out of 6 micros, and I'm down to only 4, all right? Now, one of the things that I should have done, and this is something we haven't talked about, but I should, I thought about hedging right at this price too. When I saw this thing happen that day, I really and truly did think about hedging. But thinking about it didn't help me, okay? It didn't help me at all because I didn't do it. Failure to execute is a bad move, and I did fail to execute. Now, when you hedge, you don't want to hedge a lot. You don't want to hedge the whole thing because then you're trapped. Now you're short. And what if it goes up like crazy and takes out all your buys? Like what happened to me on gold a couple of days ago. Remember that? I was long gold, and we were long gold for days, and then it blew up and it went crazy. Did exactly what we wanted it to do. It ran its 30, 40 points, and I hedged up a little bit short because I was afraid of them actually raising the rates, and I got stuck with the shorts. And gold blew up higher and went up and took all my buys out. And then I was stuck short. And then I was stuck short for a couple of days, working it. Just got out of them today. Just got long today. Okay? That's the patience of waiting. It paid me well. But to hedge would have been the brightest thing to do. Not all, but maybe 10% or 20%. Maybe, I had 6 micros and I could have hedged 2 of them. All right? That would have been, 33% hedge. It would have been a good idea because we can make money on the way down too. And you don't even get out of your hedge. You just simply keep it until you see something crazy like that bar right there. Now that one would say to me, I don't want my hedge anymore. I would have got out of the hedge on a bar like this, booked the money, and went long. And here's another example where I would have went long again. Okay? Another long right over here. So this would be a long, that would be a long. I would be out a little bit and holding on to this one. And any pop like that, that's time to leave. And you can see it wouldn't have been much gain. There was about 10 pips there. And that would be okay. I'll take this 10 pips here, and I'll take this 10 pips here. Okay? And then you simply reach in and wash away a micro. Now, as you know, we started this with $1,000, and we can't wash a micro in half. We can't wash a micro in a quarter. So the example that I'm trying to give you is the 0.10s. When all of our accounts are up to $10,000 and we're all trading at 0.1, things get dramatically easier. They really, really do, because then you can wash away and you can do it very well. All right, take a look. I could have nailed a 0.1 right there on that bar. Oh, it went against me. Okay, I could have nailed a 0.1 right there. Uh-oh, that one went against me too. Yeah, it's okay. I only fired 2 bullets. I got like 8 left, right? Another one possibly there, like that bar. okay, or maybe this bar or somewhere around here. All right. So as that goes up, now you got 3 bullets in, right? As this goes up here, and I start to see 1-minute sell actions, believe me, this is a 15-minute, guys, 15-minute chart, okay? If I'm in, and I see this thing rocking like that, folks, that's 30 pips right there. You better believe me I'm taking $30 on this trade. And on this trade here, it would have been about 25 maybe. So that's about 55 bucks. And I would simply reach into this one over here, right? And I would wash away like half of it, literally. There'd be 5 micros disappearing, 5 of them on this trade. And that is the basic concept. You are just to be very, very patient, waiting and waiting through time, hunting for a quality 5-minute buy. A quality 5-minute buy bar. Quality. See? Get out. Wash a micro lot. This move right here, 60, 70, 80, that's 20 bucks. Get out. Wash a micro lot. Take a $20 gain, wash away a $10 loss, if it has to be, okay? But the goal is this. You want to always make about double. Like if you were to buy right here, okay, at 129.70, right there, and you see a quick sharp move like that to 130.40, okay, let's say that we did not exit there, all right, we got in at 70, we weren't lucky enough to exit for 70 pips. Let's say it went up here and you exited somewhere inside. Remember, this is a 15-minute chart. You're watching the 1s, the 5s, the 15s. Let's say you grabbed somewhere in here. All right, from 70 all the way to 20, that is $50 move on a 0.10. And you simply reach back and you kill something like this. In fact, that actually would have been in profit right there. So this might have gone out for a pip or two, just a little bit. All right, but remember, we have other trades. There were other longs that are way up higher. So we can only wash away a lousy micro lot at a time. The goal is to consistently book money on, this pair or any pair. If you have to use the gains from another pair, do it. You've seen how I've done it in the last, how many days now? We've had our live room for 19 days now, all right? 19 days. You see me build up 400, 500, 600 pips. What do? I go in and I find something that I can wash away 100 pip loss on a micro lot because I need to build up 50 bucks to be able to take a $10 hit and end the day with $40, okay? It's the same way if this was 0.1. You just made 500 trading all day? Great. Is there 100 bucks somewhere that you can wash away on a bad trade that's just been sitting in your account for a couple of days? Forex reserves, garbage, dirt. You want to get rid of it? So you make 500, you reach in, take a $100 loss. What's wrong with that? I see no problem in there. You made 5, now you're going to end the day with 4. Okay? That's fine. So end the day with 400 and get rid of a 0.10 or get rid of 0.05 or whatever you can. But search for something that makes sense at a price point that makes sense. Don't just take it off the table like, randomly and blatantly. Sometimes if we have a little bit more patience, we can make it pay a little bit better. All right? Same thing you'll notice with what I've been doing on the Euro Pound and the MXN. It's taken me multiple days. We now got the biggest daily sell bar of all on the MXN. I'm holding it now because it looks like it's going to rock. It's going to rock down tomorrow, okay? So, but I've made money all along the way. I could afford to take some more off, but I'm not going to bother to do it because the chart shows me it's about to split open another 1,000 pips south. Okay, so I'll be just fine. All right, well, I hope this makes sense. And my guess is this is probably not going to be the last time that I ever teach on this, that we probably will have to have another video or two at some future point on washing, because it's a difficult subject for some people. But the concept, as I said before, guys, is to simply book money. You're just going to be patient, waiting for the next buy. Or if you were short, you're patient, waiting for the next sell. And you're waiting for it to crash, where you book your trade and you reach in and you wash away a little tiny piece. And you always use a calculator to calculate it. You don't want to trade for free. You want to make sure that you're actually getting paid money for this service. So if you have to take a $20 gain and wash a $20 loss, that's a no-no. You can't do that. But if you want to take a $20 gain and wash away $5 or $10, then that's okay. That I let you do. Okay, that I say go for it. All right. The whole goal is to take your Forex reserves, and that would be the 10 or 20% bad trades that we're in, slowly whittle them down. Okay? All right, guys, I'm out of video time. This thing hit 1 hour. I'm sorry. That's just the way it works. So, damage control, getting out of troubles. In conclusion, read the disclaimer over again. This does increase risk. So if we choose to do this, it must be with caution, and it has to be in a calm and calculated manner. An ultimate stop of some sort that you have inside of your head, you should determine this, at what point that you're willing to just puke out and throw in the towel, okay? You figure out what that would be, all right? And does this ever go wrong? Yes, it does. Absolutely. It is not often, but it does happen. So please, only do the damage control if you truly feel that you can handle the risk and if you feel that you can manage this endeavor, because it is an endeavor. It's almost like a little occupation to work on those losses. It's not easy. I'm not telling you it's simple. I would never encourage you to do this with a position size that is more than what you're comfortable with. But as long as the sizes are small, and as long as you're comfortable, and you can keep calm under pressure, and hey, you're trading all day anyway. I mean, you're trading lots and lots of other pairs, and you're making money on all kinds of other pairs. There's really nothing all that bad about being calm about the one bad trade you have. Just remember, sometimes it's very easy. The washes can be done in just 2 or 3 washes. Other times, it's a little more difficult. It might take a day or two, and you might have to wash 10 times. I can tell you the worst one I ever did. In fact, I've got about 2 minutes left on this video. I will go ahead and tell you the worst one I ever did was US-Japan, and it was like a month or 2 ago. I went long, and it was against me, and I worked it, and worked it, and worked like you would not believe. All right, this is how bad. I held that trade against me for something like 3 or 4 weeks. I committed hundreds of washes, okay? Me and US-Japan, we got very intimate. I knew its every move. Hundreds of washes. And just when I finished getting all out, oh yes, you can guess, it absolutely rocked. It went so high. It went up and away, and it hit something like 105. I forget. It went crazy. And as I looked at it, I just shook my head and laughed, and I said, wow, all that work. I mean, I worked for weeks. I made a lot of money. But it was agony working it for weeks just to see that when I was finally out, it spit in my face, waved goodbye, kicked me right in the pants, and flew all the way up to 105 and laughed at me all the way that it went there. Okay, I'm sorry, but I had to share that with you. That was the worst I ever did. At one point, I think I was down 1,000 $500, okay? Just to let you know how bad. So I think when it was all over, I turned that $1,500 loss into, I don't know, maybe I made $1,000, you know. But really, 3 weeks worth of work for $1,000? Yuck. Yuck. And then it just kept on going. And I looked at it and I was like, oh man, that 1,000 could have been 3. All right. Hey, that's the way it goes. That's the way the cookie crumbles. Okay. This is the way of the market. It does that to you. All right. Till next video. Everybody have a great night. Trade safely. Remember, it's a jungle out there. So keep calm. Trade safely.